Good morning from London. I'm Anna Edwards alongside Guy Johnson and Lizzie Burden. We're an hour away from the opening trade. Here's what you need to know. The yen edges higher as the Bank of Japan holds rates, with Governor Ueda looking for calm after his July surprise. We'll bring you his comments from his press conference in Tokyo in half an hour. The S&P 500 hits a fresh high as stocks rally following the Fed's jumbo cut. Asian stocks continue the risk-on move, but European futures signal a pause. Plus, we're heading into a big weekend for European politics. Crucial German regional elections kick off, while France's new PM could begin naming his cabinet.
Well, we had confidence in that soft landing, powering the S&P past the 5,700 level yesterday, but futures pointing lower on both sides of the pond this morning. The pound crossing $1.33 off the back of that cautious hold from the BOE yesterday, still above that level now. And we had the BOJ decision earlier, holding as they were, and 142 per dollar is where we trade. The countdown to the opening trade starts right now.
Friday the 20th, good morning, welcome to the programme. Big rally in equities yesterday, maybe cooling off a little bit today. The Bank of Japan has delivered what everybody expected, i.e. nothing, but we await the press conference, which will kick off in around 30 minutes' time. Will that be a source of volatility? We will wait and see. In the meantime, we have data out of the UK that we need to digest. I've always been told that what you want to do with consumers is watch what they do, not what they say. And I think the UK is a classic example of that right now. Overnight, GfK consumer confidence down and down hard. Apparently, Keir Starmer is the fun sponge and everybody's nervous about the upcoming budget. But then you take a look at retail sales this morning, Lizzie, and they tell a different story. Yeah,
hot summer for retail sales. 1% the figure for retail sales, including auto fuel, for the month of August. The estimate was for 0.4% growth. Last month, it was 0.5%, so a big beat here. Of course, August, the month when the BOE first cut interest rates. Interesting statistic here that you have 18% of households on variable mortgage deals. So they're the ones perhaps powering this boost. But very Britishly, it also comes back to that hot weather that we had in August.
Well, yes, I was going to take issue with the hot.
Well, I wasn't here, so I wouldn't know.
I know, and I feel this personally because I had a very wet staycation. So certainly my memory is a little different of August. But anyway, somebody found some room to go out shopping.
Anna bought wet weather gear.
I did.
Sorry, I was in Dubai. How would I know?
That's exactly how we roll, Lizzie. So that's where. So yeah, I was a little surprised by the narrative, but anyway, I can see the retail sales data, as you rightly point out, Lizzie, does look kind of strong. It is interesting that GfK number though, it's come down the most in 2.5 years, and this is the kind of drop we saw in consumer confidence when Russia invaded Ukraine. This feels quite strange that we're seeing that in the data right now. I mean, yes, there is some mention in the GfK analysis that perhaps it's to do with the political messaging we're getting and the fact we're waiting for a budget. We'll have to see. But that's doing a lot of heavy lifting if that's the case.
Yeah, and look, Keir Starmer's not saying that he's going to raise taxes on working people, who are the people who power the high street, right? He's kind of looking to raise taxes on the higher levels, on businesses, as we expect. But is it really people worrying about their private school fees who are holding back consumer confidence? Seems a weird narrative.
But I think it's the overall narrative, i.e. things are worse than we thought they were, that we are ultimately in a more difficult environment than we anticipated. That has been the message from Reeves and Starmer consistently. Business is telling us that they are concerned that this is going to affect investment into the UK. Maybe the consumer's not that out of kilter with that narrative either.
Yes, really interesting. I mean, I was listening to Allegra Stratton, used to be on Downing Street, of course, and she was talking about how, we're all being played. This is the story. This is what you do.
Absolutely.
You tell everybody that it's
but
all
have they overplayed the hand?
Exactly. And is that starting to have an impact on the street? It's certainly something we need to watch. Shall we pivot to other macro themes? Because we need to get to the BOJ. As you said, didn't do anything, held. But I think calm and not too much noise and no volatility after the BOJ is probably something the BOJ was looking for this time around, given what happened last month.
And certainly that is what Ueda is going to want to maintain throughout this press conference. I'm sure he's going to be trying to make absolutely no news, not spook the market again at this press conference. The comms really under scrutiny this time. Of course, we also had the CPI data out this morning, accelerating in August for a fourth consecutive month. Our economists just looking at their forecast see another hike in October.
Yeah, but that's OK. How does he position the market for that? If he doesn't want to make news, if he doesn't want to shake everything up, how does he get everybody ready for that idea that we are going to be seeing further hikes coming through from the BOJ? The data would point them in that direction. Doesn't he need at this point to maintain the kind of hawkish stance? The statement at the moment feels very neutral. Doesn't he need to maybe kind of edges towards the hawkish side of the table?
Well, maybe that is why we're seeing a bit of upside in the yen. That's certainly what they're saying over at SMTB this morning. There was no mention of the global growth slowdown in what the BOJ told us today, and there was a lot of mention of strength domestically, and so that underlines the expectation that we will get this sort of fairly hawkish or moderately hawkish line coming through from the BOJ. But if the market is expecting already that they will hike sometime before the end of the year, then maybe that's all it takes.
But that's not what's priced. The market is pricing actually very few rate hikes still from the BOJ. So does he need to increase the pricing so that there isn't the surprise when it ultimately comes? So we don't. So I just wonder whether, on balance, the risk is that, given this kind of reasonably neutral statement, the danger is that he needs to be more hawkish.
And there's political uncertainty.
I was going to say, just briefly, that actually inflation a key topic in Japanese politics now. The race, of course, to find Japan's next Prime Minister. So another reason why Ueda needs to tread carefully here in the messaging.
All I'm saying is that we are going to tune in to the press conference. It's going to kick off in around 25 minutes' time. We will bring you the headlines from it and make sure that you're fully up to speed with what you need to know about what is being said in Japan. Let's talk about the car sector. Mercedes, another shock from the auto sector out of Europe, firmly focusing on the story out of China. That is where the weak growth is coming through. Its latest vehicles have not gone down very well, as a result of which Chinese consumers are buying Chinese cars. This is a problem for Germany because the whole idea was that in some ways strong sort of Chinese demand was going to power the EV transition, which is looking more and more speculative every day that we go along.
And I think this is having an impact on early expectations around where Mercedes trades this morning, and so we'll certainly watch out for that. What's interesting about the Chinese buying Chinese cars is that, yes, there's the price in there, and that's what tariffs can take on here in Europe. But there's also an argument that Chinese are buying Chinese cars because they prefer the in-car entertainment systems, and actually the Chinese might be winning at some of that sort of peripheral technology that consumers care about.
Yeah, winning on the quality, but on the quantity side, as you say, tariffs could give the European car makers a bit of a breathing room from the Chinese competition. We've had this meeting between the EU's Valdis Dombrovskis and the Commerce Minister in China, Wang Wentao. So we look ahead to that deadline just days away for the tariffs, and obviously also our market, the European market, crucial for China.
I drive a very battered old Golf, but I can't help thinking that I'm being excluded from what is a better Chinese product. Is this in-car entertainment so much better? Is the experience so good that actually we're all being denied it because of what is happening in terms of the tariff story out of Europe?
Well, we're going to talk to Danny Lee later. I think he's been test driving them, right?
Has he? We'll find out.
He can tell us. But it's part of the wider narrative, isn't it? Obviously, today's story is around Mercedes. Was it last week or the week before? VW talking about closing factories potentially in Germany, BMW downgrading its guidance. So the stories out of the German auto sector come thick and fast, and they're never of a very positive nature right now.
Yeah, which speaks to the ECB story. Remember Goldman's Jan Hatzius saying that you're going to see consecutive cuts from the ECB and pointing specifically to the weakness in German manufacturing. This is just the corporate side of that same coin.
Talking of Hatzius, Goldman Sachs' chief European economist, who works for Jan Hatzius, is going to be joining us very shortly on the programme. Yari Stein is going to give us a kind of update on what's happening with the UK. Can we blame the weather for the latest data? Should we be seeing a big gap between the GfK consumer confidence data and the retail sales data? How do we explain it? We're also going to be getting Bank of America's take on that BOJ meeting. What we're going to basically do at past is kind of bring you an instant analysis. We'll get Bank of America's take on the BOJ. Mark Cudmore will also join us to give us a take on what is happening there. We've also got Edmund de Rothschild, CIO, joining us a little bit later on in the programme. The idea there is we'll talk about the markets. I also want to get a take on what is happening with the French story and how that is developing and how that's likely to impact French markets. Germany, front and centre. We've just been talking about the car sector, but we've also got this regional election coming up. Judy Dempsey's going to be joining us a little later on in the programme. Is Olaf Scholz's job at risk? If the AfD do well this weekend, could his party take him off the ticket for the upcoming election, general election, which is going to be taking place next year? So there's a lot to talk about this morning. We've got it all covered. We've got some fantastic guests to walk you through all of the action that we're seeing this morning.
A bit of breaking news coming through this morning as well. We should just get to a red headline on the Bloomberg terminal telling us that Thames Water is considering options to extend its liquidity runway. And the detail of this story is that Thames Water and its financial stakeholders are considering options for the extension of the company's liquidity to enable time to complete a recapitalisation transaction. So looking for, money to hold them over, essentially, until they can find the sources of investment that they need. A bit of a holding statement in response to Ofwat.
I can't believe you missed the joke on, or didn't take the bait on the liquidity runway or runaway.
OK, nice. Sorry, I'm half asleep this morning.
It's Friday. It's been a long week.
So there we are. There's the latest on Thames Water, an ongoing saga in the UK that we continue to watch. Let me tell you some of the other things that are coming up today in terms of the trading diary. I feel really boring now for not having spotted that one. Right, 3 p.m. Euro area consumer confidence. 4 o'clock, the ECB's Christine Lagarde will be delivering some comments later on. That's a lecture of some sort. And we get sovereign rating updates from France, UK, here in Europe. And we get triple witching over in the United States. I mean, sometimes this is dramatic. Sometimes we kind of build it up and it ends up being not so. But it can whipsaw stocks. And when stocks are at a record, the options expiry of stocks, indexes and ETFs may be worth keeping an eye on.
Yeah, could just see a big jump in volatility.
Yeah, absolutely.
It's been a busy few days.
Yes, it has. Let's get to the corporate stories.
Yeah, talk about everything else you need to know this morning, because it's actually a fairly busy morning on the corporate front, plus also the political front. Let's start with the politics. The French Prime Minister, Michel Barnier, has proposed his plan for a new government. He's proposed it to Emmanuel Macron, the president. It's been a couple of weeks of tense talks with rival political groups. Barnier's office said the meeting was, quote, constructive, and that the final makeup of his team will be released on Sunday. So we'll have that for Monday morning. Nike has ousted its CEO, John Donahoe, and is bringing back longtime executive Elliot Hill. He's coming out of retirement to return the struggling brand to its glory days. Hill joined Nike in 1988, that is, and served as president of Consumer and the Marketplace before he retired back in 2020. Nike has slashed its revenue forecast and did so back in December after losing ground to competitors. And Anna's favourite story, she was flagging it yesterday, so I feel honour bound to bring this to you this morning. FedEx is expecting a slowdown in the year ahead after what the CEO is calling, quote, a challenging quarter. The delivery giant was hurt by a pullback on priority services as consumers traded down to cheaper options, i.e. it doesn't need to be there by 10 a.m. tomorrow. I think I might be mixing my brands up, but they're going for maybe a slower delivery.
Yes.
So that's what consumers are basically signalling, consumers and businesses critically here.
Yes, absolutely. And so it does get looked at as sometimes a bit of a warning on the US economy in the FedEx case, or in it's more the global ship, as you can also talk about the global economy. But yes, it's that reduced demand for priority shipments, the fact that people will let it go slower and cheaper. That is something that we need to watch, because if that tells us something about the US consumer and its priorities, or US businesses and where they're trying to save money around the margins. Weaker than expected demand trends, and that certainly sent the stock down. It was down 11% in session, weighed on the sector.
Yeah, you saw UPS falling 2.8% in the post-market, so we'll keep an eye on Deutsche Post in our open later on. But just while we're on the corporate news, we were talking about the weakness in China hitting Mercedes. That's also hit Skechers this morning, so tying back to the Nike story on the trainers.
Absolutely. So Nike, are we calling it Nike or Nike? I never know.
Pretty's not here, it's OK.
OK, we can do that. That's true. That's true. So we're going to call it Nike this morning. Much more comfortable. Yeah, I guess it had a big problem. So Donahoe came in. He basically relied on a lot of kind of tradition within Nike to deliver some really good numbers initially. Then that kind of ran out of steam and he didn't really have anything to replace it. My kids talk about the Panda Dunk. It apparently is the trainer that was expected to really be so good and then didn't deliver, and everybody then hated it. Basically, the heritage story didn't work for them. They also changed their relationship with Foot Locker in a fairly big way, and that allowed brands like On into the market in a way that maybe wouldn't have been possible if Nike had maintained its traditional relationships. Yes,
a very enjoyable trip to Switzerland to talk to the co-CEOs at the top of On Running. But it is, yes, space for brands like that has to some degree disrupted the likes of Nike and Adidas as they battle it out across the Atlantic.
More R&D, I think, is the message that's coming through. They're going to push that much harder, particularly in the running space. So we're going to see more R&D coming through from this company. But it feels like the message was things haven't been easy.
Yeah.
And you do wonder how long it's going to take to put things right.
Yeah, they're going to need to push the R&D. The Olympics have been and gone. But lots happening in the corporate front. Let's tell you what else is coming up. We'll get the breaking lines from Governor Ueda's press conference in Tokyo as they come in. And at the Open, after Mercedes cut its outlook, European autos are among the many corporates, as we say, very much in focus this morning. But up next, it's been a big week, of course, for central banks. Goldman's chief European economist is going to help us make a bit of sense of it. If you've got any questions of your own for our guests, please do send them in to IB Plus, BBTV Go on your terminal. Do stay with us. This is Bloomberg.
What we're looking at now is underlying growth in the economy of probably somewhere, it's somewhere a bit under 1.5% a year, probably 1.2-ish, 1.3-ish. Now, that's pretty much in line with some of the estimates we've made of how much the potential there is. And I fully agree, and by the way, I fully agree with the previous government and the current government, so I'm not making a political point here, that an imperative is to raise that potential growth rate so that we can see faster growth within the speed limits.
Bank of England Governor Andrew Bailey still relatively downbeat about the UK growth prospects, talking about speed limits, talking about the inability of the UK economy to grow too fast without causing inflation to re-accelerate. The market effectively has another cut coming this year, then we get kind of sequential quarterly cuts. That seems to be what is largely priced in. Our next guest thinks that that's a little bit cautious as well. Yari Stein, chief European economist at Goldman Sachs, joining us around the table this morning. You think they'll go faster? Why?
I think they will from November onwards. So it's true that the spot inflation data is still pretty firm. There's still momentum in the economy. Obviously, the communication yesterday was fairly cautious, talking about a gradual approach. But we think when you look ahead, we think there's some slowing in the economy going on. We think inflation will come down more than they think. A lot of the inflation strength now is pretty backward-looking. And then we're also seeing significant shifts, obviously, globally in terms of monetary policy, the Fed cutting more quickly, and we think that's going to put enough pressure on the Bank of England to also speed up the pace of rate cuts. And we're not talking about 50 basis points or some really dramatic change, but I think it'll become increasingly clear that you want policy to be at a normal level rather than at a restrictive level. And so from November onwards, we have them going sequentially at every meeting. Is
the budget at the end of October going to slow the economy even further? Because that seems to be the feeling at the moment. I'm not so sure. I mean, I think basically what's going on is that there will be more spending. We found greater spending pressures than we thought. And I think the Labour government will raise taxes to sort of broadly offset the impact of that. Do they just balance each other out then? You would roughly say so. I mean, in fact, you would normally say that spending has slightly bigger effects on growth than tax increases, particularly if it's things like capital gains tax or inheritance tax. So on net, we don't really look for a big effect on the economy. If anything, we think it's slightly growth supportive. But then most of that might have already happened because, in a way, these tax increases are a response to spending pressures that have already occurred and might have already boosted growth over the last few months. So I'm trying to diagnose why you think there'll be this slowing ahead. If it's not the budget, is it partly down to the pound's strength hitting exports? I think it's... So basically we had 0.7% growth in Q1, 0.6% in Q2. We have basically 0.3s, 0.4s going forward. So I would call it a moderation of growth from sort of a rebound after the weakness in the recession last year to essentially a trend pace. And I think, part of that is that the boost to consumers from real incomes is moderating. Part of it is, of course, that some of the key trading partners are growing more slowly. And part of it is that fiscal policy is still restrictive. And so we think a trend-like pace is the more likely outlook here. And we also had Norway's central banks holding rates. I mean, to what extent do you see this transatlantic gap in the pace of loosening opening up after the BOE holding as well? Yeah,
the way I would think about it is that the Fed went big because of concerns around the labor market deterioration. The European central banks, so BOE, ECB, also Norges Bank, the smaller ones, are still more concerned around spot inflation pressures that are higher. I think that has a lot to do with the energy crisis having been bigger in Europe, and there's still lagged effects from that. But we expect the ECB also, as we go forward, to speed up the pace, because we think these inflation pressures across Europe are cooling as well. And the bigger steps by the Fed, I think, are going to put more pressure on the European central banks over time.
Yari, what is happening with services inflation in Europe? Because I think that was one area this week in the UK story where we still saw a little persistence. I think you think that that's coming down, that services inflation element in the UK. We've got the ECB's de Guindos, though, talking about services inflation being the weak spot of inflation in the Eurozone. That tells us something about the fight against inflation, does it? Are we getting towards the end of this services spike up?
I think so. I mean, it's clear, of course, that the numbers are still high, both in the UK and the euro area, and they need to come down for inflation to return to 2%. I think that's quite clear. But we would argue that the services inflation strength is now predominantly backward-looking. So first of all, it still reflects, we think, past price pressures. So when you look, for example, at restaurants, pubs, catering, and so on, quite energy and food-intensive sectors in services, the current strength in inflation still reflects essentially the pass-through of these past energy and food price increases. And we think that will wash out. The other part is related to wages. We obviously are still seeing firm wage growth, and that is driving services inflation in the labor cost-intensive parts. But again, we think the strength in wage growth is more of a catch-up to the high inflation rates we've seen in the past, and the more forward-looking things, whether it's in the UK or the euro area, are softening on the wage front. We're
covering a lot of gloomy news once again out of the auto sector in Germany. Today it's the turn of Mercedes, it was VW, it was BMW. We've had a lot of this negativity. We heard from the Bundesbank yesterday Germany may already be in a mild recession. How difficult, in your assessment, are things going to get for the German economy through this winter?
I think they are very difficult. They have already been very difficult. Germany has sort of been flirting with recession now for a couple of years. I think some of this is cyclical. You have obviously high interest rates. You have cyclical weakness in China. You have still some leftover effects from the energy crisis. But some of it clearly is also structural. You're seeing permanently higher energy prices. China is slowing more structurally, and then obviously in the auto industry related to electric vehicles and so on, there are some longer run issues going on. So I think it's a difficult mix. We've obviously seen very weak industrial production numbers out of Germany for some time, but I think one issue in which I take some comfort in is that when you look at value added in the manufacturing sector versus production, it's down much less. So in other words, German companies have managed to move into higher value production sectors and limited the effect on overall GDP and on overall value added. So I think that's an important point to keep in mind.
How much of Germany's problems, how much of Europe's problems are structural?
I think there are a number of important structural issues going on. Population growth slowing, the aging of the demographics.
And if migration is made more difficult, does that become even more of an issue?
It would. I mean, over the last couple of years, what we've seen is that the aging of the population has sort of been offset by a lot of immigration, a lot of it from Ukraine, but also other parts. We think that's likely to slow, so that demographic drag is probably going to get stronger. You also have a lot of reliance on China. You have higher energy prices. So I think there are a number of structural headwinds that we're facing.
Yari, thank you very much. Thanks for joining us. Yari Sen, the chief European economist at Goldman Sachs. We pivot from Europe to Japan next. We'll hear from Governor Ueda shortly. This is Bloomberg. Welcome back. This is the opening trade, half an hour until we get that opening trade here in Europe. Let us take a moment to think about the Bank of Japan, though. Governor Kazuo Ueda is speaking at a press conference in Tokyo. He has just taken to the stage. He's just started giving his opening remarks, waiting for some headlines. The top lines, though, really coming through this morning were that the Bank of Japan did not change interest rates, but that was widely expected by the market. The yen has gained, though, on the expectation that maybe there might be something a little hawkish coming from Ueda.
Session lows for dollar yen right now as we go into this press conference. He was early. Does that signal anything? Is he eager, anticipate
you
a
want it
kind
to
of
signal something.
maybe, hopefully.
Eager for the weekend, Guy,
we're
perhaps.
looking for some volatility here, maybe. But it does feel as if the yen is, as somebody put it on the Bloomberg terminal very nicely earlier on, a coiled spring. If he comes out and sounds hawkish, you could see quite a pop here. So it's going to be really interesting to see as we go into this press conference what kind of tone he starts with. Does he sort of out of the gate start with a reasonably hawkish tone? He's going to be kind of reading, consolidating really what we've learned from the meeting, from the statement. How does he then sort of translate that into maybe this hawkish tone that maybe we're anticipating? There's a lot of maybes in here.
Yeah, look, we've got a fantastic T-Live blog running on the terminal at the moment. Our FX strategist out of Singapore, David Finnerty, saying if he throws a rate cut on the table, it would easily send the yen under 141 before the end of the day. So we'll keep an eye on that as Ueda is speaking.
Yes, a rate hike. But are they talking about?
So it's cut.
Okay, well there we go. If everything's on the table.
I'd be surprised if it was a cut.
Yeah, I mean, so we are getting some lines coming through. Japan's economy is recovering moderately, and that is where a lot of the focus is for Japan and the Japanese story. It's domestic. It's all domestic. Yes, there's FX exposure here, of course, and that has an impact on inflation, but it's all domestic because the rest of the world is moving in a very different direction. Let's get some analysis on what's being said in Japan right now and what we are expecting to hear from the BOJ. Izumi Devalier joins us, Chief Japan Economist at the Bank of America Global Research, with analysis of the Japanese story. Izumi, nice to speak to you this morning. Thank you very much for being with us. Let me start with expectations of some hawkishness. Are you expecting some hawkishness from the BOJ, from Governor Ueda this morning?
Well, I think it depends on how you define hawkishness and relative to what, right? So I don't think we're going to get much in the way of new signals in this press conference. You know, ever since the July policy meeting where the Bank of Japan surprised some market participants with a 15 basis point hike and following, market volatility, the BOJ speakers have been very consistent in their messaging that their basic policy stance has not changed. In other words, they've been saying since April that they're optimistic that underlying inflation in Japan will continue to improve towards their 2% target over the next couple of years, and that if they can confirm and further progress, and if they have increasing confidence in the achievement of the 2% target, that further rate hikes and removal of monetary accommodation will be warranted. So I think Governor Ueda is going to reiterate that message. Of course, markets have been very sensitive to the BOJ, headlines, so we could get a little bit of a reaction, but if that's what we get in the way of messaging, he's not really saying anything new here.
A nice line coming through now. We need to watch the impact of market moves on the economy and inflation. And he could be referencing, of course, what movements in the currency does to import prices, the cost of energy, of course, in Japan, part of that. He could also be talking about the market moves that were triggered back in July when we saw a move in interest rates from the BOJ at the time when we got data out of the United States, and all of that added up to a lot of volatility. Izumi, what do you think the Bank of Japan learned from last time around?
Well, one is that, I think they were somewhat surprised at the market reaction to the July policy decision. Of course, they have been saying, and I think in their defense, not all of the market volatility following the July policy decision was due to Japan factors. Of course, we had some data misses in the United States, so that contributed. But I think one thing that they have been emphasizing in recent speeches is that they could probably take a bit more care with the communications. They don't need to telegraph, they don't need to announce to the world that they're going to do a rate hike at X timing. But I think there was a lack of BOJ speakers in July that perhaps contributed to the volatility. So that's another reason why with respect to the next move, we think it's going to take a little bit more time. I think they're going to communicate their thoughts around the economy and the future rate hikes quite carefully going forward.
they're making that point very clear at the moment. Financial markets still unstable. Yet also the line coming out of the governor is that we need to adjust. We will continue to raise rates if the outlook is realised. Real rates remain at very low levels. Is market instability preventing the Bank of Japan taking action?
Well, I think they had been clear, in speeches following the July decision that, they are not going to hike in a period of market volatility. It was initially, I think, communicated via the deputy governor, Mr. Uchida, in early August to calm down the markets, and that guidance is still held. I don't think we should be surprised. No central bank is going to want to exacerbate volatility in the markets. Yeah, I mean, they held today, and I think one of the reasons is that they need to still monitor the impact of the July policy decision and the market movements since July before making further decisions.
We need to watch the market with vigilance for the time being, is another line that is coming out now, Izumi. What volatility measures are they watching? What should they be paying attention to? What are they paying attention to in terms of their assessment of this unstable market? What does a stable market look like for the BOJ?
Well, I have to be kind of honest here. I don't think they're concerned, particularly at current levels of market volatility. I think this emphasis on needing to monitor market volatility is in part defense, right, for why they're maintaining a hold stance at the moment. But I think there's a couple of factors that they are looking at, and that's going to, determine the timing of the next rate hike. We have been saying that the BOJ likely is not going to hike rates in October either, and that's because there have been certain developments, I think, that raise a little bit of the uncertainty for the BOJ. The first is the fact that the yen has strengthened since the July meeting. So, if one of the reasons why they did move forward with rate hikes in July was this the excessive depreciation of the yen, which added upside risks to inflation, that the urgency to address the FX factor, I think, has been reduced since then. Another factor is just the uncertainty around the U.S. outlook. The BOJ has been optimistic around the resilience of the U.S. economy. It's assuming a soft landing in its baseline scenario, and arguably the Fed moving forward with cuts at its September meeting should add to the BOJ's confidence, because the Fed easing should increase the probability of a soft landing. But we have had some recent deterioration in the U.S. labor market data, so I think they want to watch the U.S. data too.
Yeah, we're just having the line, Izumi, from Ueda in the press conference saying that upside inflation risks have eased, also saying that there's room to mull policy with receded upside risks. You talk about the US, though, you talk about the macro central bank story. I wonder about the impact of the politics, both in the US and Japan, into the rate path ahead for the BOJ.
Yeah, I mean, that's arguably another reason why they might skip October. We have, not only do we have the U.S. elections on November 5th, but we do have the LDP, Japanese ruling party leadership race on the 27th, and possible general elections before year end. So I think, that doesn't necessarily prevent them from moving, but at least I think with the U.S. elections, they want to see how the market impact shakes out. And if it's a different story if the yen was still stuck at, dollar yen of 155 or 160, and there was real upside risks to inflation from FX. But as Governor Ueda noted, that risk has diminished somewhat over the next 1 to 2 months. So they have a bit more wiggle room. They have the room to, wait and assess the data and choose the best timing to deliver the next move to 0.5%.
We've also just had Ueda saying that he believes wages will continue to rise, that we can expect a rise in wages at the spring talks next year. But I just want to go big picture for a moment, Izumi, because we were just talking to Yari Stain about population growth, populations here in Europe. You've been arguing about Japan's shrinking population, and that actually, because firms are going to struggle to hire people, they're going to step up capital goods investment and actually become more productive. negative. You say that's like Darwinian competition, but I wonder if we're talking about evolution. The dinosaurs went extinct. Could that be the fate of the Japanese economy?
Well, I'm not sure I used the exact phrase, but certainly the hope is that, by maintaining this high-pressure economy, the labor shortages, the pressure on corporates will encourage much-needed investment, a re-examination of sort of old static business models that prevailed during the deflation era, and the end result is a pickup in productivity and real wage growth, which is really what would make households better off. And I think that's the story that the BOJ has actually been pushing these days as well. I think historically there has been some resistance to BOJ rate hikes with the criticism that, SMEs will, suffer, employment will suffer. But the BOJ is saying that, look, the economy is very tight, right? Labor shortages are structural. They're here to stay. So, I think they are, they can tolerate a bit of, this kind of culling of firms as a result of the high pressure economy.
Just to recap some of the lines we've been hearing, we're watching what's happening with the dollar-yen in session, of course, and we started this programme, Izumi, 40 minutes ago with the yen a lot stronger than it is now, so it's faded. The yen has faded. It's up 0.1% against the dollar and no more. And it seemed to move on some of the acknowledgement from Ueda that the upside risks to prices from yen weakness are fading, and some of those similar lines that upside inflation risks have eased. Is that a signal? I mean, it does seem as if maybe this is being... I mean, that's sort of more dovish commentary than we might have expected to hear today, do you think?
Well, once again, it's not new. I mean, it's a fact. Yeah, I don't think the BOJ is trying to send particular signals or move markets in a particular direction. I think Governor Ueda has been quite honest in articulating how he sees the economy, how he sees inflation risks, and he's just addressing the fact that given the moves that we had in the yen, the extent to which, the FX imposes upside risks to their inflation outlook has diminished. But that's just one part of their guidance, right? Their basic policy stance is that even absent additional upside risks to the inflation outlook, including from FX, if things just are on track, if inflation activity moves gradually in line with the forecast that they laid out, that is enough of a reason to raise rates further, because the monetary conditions are still very easy in Japan right now, and real rates are deeply negative at the moment.
Izumi, thank you very much for your time. Izumi Devalier, Chief Japan Economist at Bank of America Global Research. We thank you very much for joining us. Interesting global lines, or lines about the U.S. economy coming through now from Governor Ueda, saying that uncertainties over the U.S. economy are behind recent market moves, and they're carefully watching what's going on with the U.S. economy to see if it achieves a soft landing. And it all brings you back to what pressure from outside will Japan be under as it ploughs a very different monetary furrow to other central banks?
I do wonder whether he's trying to point the finger away from the Bank of Japan in terms of where there is a source of volatility in the global economy right now. It's not us, it's them. It's over there. It's the Fed. They're causing all the trouble. It's not us.
But look, this is very different from July. No forward guidance in the statement this time. A very different Ueda at the press conference from that last meeting. But look, coming up on the programme, Mercedes slashing its outlook after seeing weakness in China. What's the read across for other automakers? We'll bring you more on our stocks to watch next. This is Bloomberg.
Welcome back to the opening trade. 13 minutes until we start trading here in Europe. Some expectation that the global rally in stocks that we've seen, given new life by the 50 basis point cut from the Fed, will pause a little as we get into the European session. So let's focus on what's still happening in Japan. The Bank of Japan Governor Ueda is still speaking at a press conference from Tokyo after the BOJ left rates unchanged, of course. But we're just digesting some of the latest lines coming through. Expectations were that we'd get something a little hawkish. Perhaps we haven't got something all that hawkish from Ueda. The yen is off its highs, at least, as Ueda sounds a little more relaxed on inflation than expected, perhaps. Let's talk to our Markets Live executive editor, Mark Cudmore, who joins us now for 3 minutes on the markets. Mark, good morning to you. So your initial takeaways from the BOJ, we had seen this expectation that perhaps we'd get some hawkish language. So far, not so much from Governor Ueda.
Yeah, he's not really shocking too much, not changing things significantly. Marginally dovish, the idea that he's pointing relaxed on inflation and pointing to unstable markets. Doesn't matter where that volatility comes from. They have said they wouldn't move during periods of severe instability in markets. So I think marginally dovish at the sidelines here, but not a big change overall. I don't think this is going to be the big driver of dollar yen, which is going to remain more about the dollar component of that pair at the moment. And I don't think it's going to change the bigger picture on the yen, which is that the Bank of Japan seems determined to try hiking rates again. And it looks very likely they might get away with another one maybe in December or something. I don't think they're going to start a sustained hiking cycle. They have an economy, the worst economy pretty much in the world. Of any major economy, it is the only one that's not growing this year. And that's despite deeply negative real yields. They can't really afford to get anywhere close to positive real yields if they've got a stagnant economy, even with the support. So I think maybe they'll get one more hike out of determination, make it look like normalization, and then they'll be forced to retreat.
Mark, another reason why liquidity may be continuing to be abundant in the global economy, excess liquidity. If I look at what is happening around the world, that seems to be the narrative that is once again emerging. And every time I've asked a trader what the best signal is to buy stocks, it's always excess liquidity. How much excess liquidity out there is there right now? And how positive for stocks could it be?
It's a great question. I'm probably not the best person to answer it. I actually think my colleague Simon White is probably the best person to answer this. But you're right, Guy. Like, liquidity is one of the most important issues. And the clear evidence is that there is a lot of excess liquidity out there. I think one of the problems is there are many different ways to measure that. It's an interesting term in itself, what counts as excess liquidity. But I think that by most informed metrics that there's still a lot out there. And that's the fact is that, we had just such an incredible pumping of stimulus into the global economy. And I think one of the metrics that was missed, including by myself, was that in COVID, it wasn't just from the central bank side, but it was just an unusual and unprecedented combination of fiscal and monetary. And while the monetary side changed and has been changing, it's the fact that, the fiscal side is continuing to pump money around the world. We have these loose budgets, and that means there's just a lot of liquidity in the system. And as you know, I very staunchly believe that's why we remain very structurally in a bull market for now. This is not to be a perma-bull. At some point it will change, but there is no hint on the horizon that any of the big factors that are needed to change this from being a bull market are anywhere close to triggering.
Mark, I feel like fence-sitting's a theme at the BOJ and the BOE yesterday. I wonder whether you think that caution from Andrew Bailey was warranted, whether you think we're going to get a November cut.
I think we might get a November cut just because of the Fed, and I think they have more justification to ease policy than the US, certainly in terms of what's priced. I think the closing of the gap between US and UK rates is one of the most no-brainer moves.
All right, Bloomberg's Markets Live Executive Editor Mark Cudmore, we thank you. And remember, you can get up-to-date analysis and insight from Mark and the team by going to MLIV Go on your terminal. Let's get to our stocks to watch now. Joe Easton is with us from our equities team.
Morning, Lizzie. So we've got another profit warning out of the auto space today. Mercedes downgrading its earnings outlook for the year ahead, and this is all due to concerns around China. They say this was triggered by a further deterioration of the macroeconomic environment, mainly in China, according to the company in a statement. Now, if we look at the stocks in focus, Mercedes itself has actually done all right over the past year to date, down around 6%. But remember, just last week we had that warning from BMW, which was partly related to faulty braking systems over at Continental. So both of those stocks were slammed. Stellantis also nursing a big loss as well. Now, analysts said after that BMW statement that there could be more losses in the sector, more warnings in the sector, because the braking system didn't really seem to account for the entire downgrade over at BMW, and they do seem to have been proved right with that Mercedes warning coming through after the close of trading yesterday. The other sector in focus, though, is logistics. FedEx absolutely slammed after the close of trading yesterday. It was down 11% in the post-market. This is due to what they say is customers, including businesses, also consumers, down trading in terms of the services that they require from logistics firms. They say the weakness is mostly in the US, but Europe, Asia also not looking great as well. So we are going to keep an eye on the postal stocks in Europe today. Take a look at the Royal Mail owner IDS, also bpost, InPost, and of course DHL in Germany. Those are the ones to keep an eye on today. Then we've got a big broker move. ASML is downgraded at Morgan Stanley. Now, they come down to equal weight. They've been overweight for almost 2 years on the stock since they initiated a couple of years ago. Now, as we can see, their price target 800, the stock trading at 750 almost on the screen. There's actually a little bit of upside for that one. But this is all due to China again with the slowdown that we're seeing in the sector. Take a look at that note. It's on the terminal. ASML in focus today.
Joe, great stuff. Thank you very much indeed, Joe Easton, setting us up for our session ahead this Friday as we continue to digest what is happening in Tokyo. The governor of the Bank of Japan continues his press conference. The surprise is not that he is hawkish, but he is dovish. The lines seem to certainly suggest that he's taking a cautious approach. He still thinks the market's turbulent, therefore he's not going to do anything. And he thinks the yen, the rise we've seen in the yen, is enough maybe to blunt the inflation story that he's been a little concerned about.
He has been. Upside inflation risks have eased. That seems to be the line that's caught the market's attention. The yen has paired early gains and is now outright dropping a little against the dollar, just down 0.1%. But that is the current state of things as we go into a break and we wait for the start of European trade. Governor Ueda will still be speaking on the other side. We'll bring you the latest. This is Bloomberg.
Friday morning, couple of minutes to go until the start of equity trading here in Europe. It feels like a different session, maybe developing. This time yesterday, we were dealing with digesting the 50 basis point cut from the Fed. Equity markets felt like they were about to be on a tear. That's what futures were telling us today. A very different story. So equity markets take off yesterday. That's the white line here. This is the European session. We faded a little bit mid-afternoon, but we come back up towards session highs at the end of the day. At this point, the US equity market is on its big tear up towards session highs, up towards that fresh record that we saw in the United States yesterday. But a little bit of an afternoon fade means that this morning, Lizzie, futures look a little softer here in Europe.
Indeed, Guy. It looks like that euphoria fade is set to continue in the session today. Futures pointing lower for Euro Stoxx 50 futures and the FTSE 100, 0.6% lower in the UK after that cautious hold from the Bank of England. We had the retail sales beat this morning, but even for the Wall Street Open, is futures pointing lower, 0.3% on Nasdaq futures. Anna.
Let's have a look at some of the individual stocks and sectors that are in focus this morning. Autos firmly in focus after we heard from Mercedes, so we'll certainly be watching that luxury car maker. GDP in China, real estate in China, all weighing on their sales in that market, including at the top end. What will that do to an already hit sector? Logistics very much front and centre. FedEx last night, stock down, in session actually, stock down 11% yesterday. That weighed on others within the sector. Weaker than expected demand trends coming through there, and so we continue to watch what read across that will have into European names today. ASML, also something we're watching, cut to equal weight at Morgan Stanley. Also keep an eye, Guy, on Burberry, cut to underperform over at Jefferies.
Absolutely. A lot of single stock stories that we need to factor into this market this morning. Looks like we're going to see a softer start to the day. The auto sector is going to be front and centre. That ASML story is going to be in the mix as well. Keep an eye on what is happening in the athleisure space after we've got news from Nike and Skechers as well. What is going to be happening there? So here we go. FTSE 100 expected to be down, let's call it circa 6-7%. So we should see some acceleration to the downside in the UK market, and that is what we're beginning to get. The Stock 600 is out of the gate down 0.2%. The IBEX is down by 0.2%. ASML is weaker. Let's see how long it takes Germany to get going this morning. I suspect that there's a little problem with the starter motor that comes from the auto sector. What are we seeing in terms of the details, guys? Lizzie?
Well, the DAX were waiting to open, but if we break it down by sector across the Stock 600, Guy, you've got all but one sector in negative territory this morning. Insurance eking out some gains higher, just over 0.1%, but bottom of the basket, tech, lower nearly full percent this morning. Travel and leisure not far behind it. Consumer products and services not far behind that. But if we look at some of the deeper names, of course, ASML was one that Joe Easton had flagged to us, and ASML down 1.86% this morning, Anna.
Yes, absolutely. So technology, the worst performing sector, and ASML certainly has to have something to do with that. Excuse me. So certainly weakness there. To your point about things taking a while to open and the starter motor perhaps not functioning entirely normally, we don't have an opening price on the DAX, and we don't have a Mercedes share price. We also don't have an Adidas share price. And of course, we're watching for both of those to respond to, well, firstly, the news out of Mercedes itself, but then Adidas responding perhaps to the Nike news. So we're watching for that. Burberry, though, I can see, is down by just over 4%. So that's on the back of a downgrade. ASML down on the back of a downgrade. It feels like one of those kind of Fridays.
We're really struggling to get Germany open this morning. So Volkswagen, no price. We've got Mercedes, no price. Deutsche Post, no price on the back of the FedEx story. Watching what's happening there. Continental, no price. So it's a number of big stocks in the German market that we are keen to see getting going this morning and seeing what kind of a story is going to be coming out of them. At the moment, the German market is kind of still posting the price of yesterday, which is up 1.5%. But there's so many factors at play this morning for the German market. All of the key stock stories really that we're watching outside of ASML, maybe we could sort of put Burberry in the mix as well, are in Germany today, and they all feel like they're very much to the downside.
Yeah, it looks like we do have some opening. Do we have Mercedes opening?
I can't see it at the moment. No, I've still got it unchanged. OK. I'm being told in my ear that we do.
But then some of the things I'm looking at on my screen don't quite look right, so I'm not going to mention them.
That's the safe option.
Yes, 20 years took me to get to that point.
Absolutely. Let's talk about what is happening with the wider economy. Earlier we caught up with Yari Stein, Chief European Economist at Goldman Sachs. This is what he had to say.
They have already been very difficult. You know, Germany has sort of been flirting with recession now for a couple of years. One issue in which I take some comfort in is that when you look at value added in the manufacturing sector versus production, it's down much less. So in other words, German companies have managed to move into higher value production sectors and limited the effect on overall GDP and on overall value added. So
The views there of Goldman Sachs' Yari Stern talking to us about the German economy, about any signs flirting with recession. And, of course, the epicentre of that today is around the auto sector, or at least that's one of them. Oh, yeah. And we do have an opening price now on Mercedes, and it is weaker, as expected, down by 7%. So the bad news keeps coming from this sector, from VW, from BMW, and the market continues to price it down.
And, indeed, autos and parts, bottom of the basket now, lower 3.2%. The DAX, lower 0.6%, dragged down, of course, by Mercedes.
But this is about China. This isn't even about what's happening in Germany at the moment. This is about a Chinese consumer that maybe is opting for the Chinese product because maybe it feels that it's better. That's a judgment call. But just generally the malaise in the Chinese economy and the impact it's having. You can see it in Skechers as well. Yes. That was interesting too.
You're absolutely right. It is about China, but then it takes us back to the structural issues that Germany has had for the last, well, that maybe the Angela Merkel government set it up with, which was the reliance on cheap Russian energy and the reliance on selling things into China. And now we see some of that coming home to roost.
And Mario Draghi really pointing the finger at Germany. And the question being, really, will Germany listen to the recommendations? Christian Lindner, of course, kind of batting away Draghi's report initially. So it'd be interesting to see with this new lineup at the Commission how much the recommendations are taken on board.
OK, let's get another perspective on all of this. Benjamin Melman joins us, Global CIO at Edmond de Rothschild Asset Management. Benjamin, thank you very much for being with us. You're with us from Paris. We have things to talk about of a French nature. We'll get to that in a moment. But as CIO, I wonder your thoughts on Germany and buying the German story at this point, given its challenges, its exposure to China, really illustrated this morning by Mercedes-Benz. The stock down by more than 7%, well, it was down by more than 7%, now 6.8% weaker, on the back of a downgrade to expectations on China. Tell me about your expectations for German assets at this point.
It's a very good question. It's true, as you mentioned very recently, that Germany is in the middle of a crisis that is not over. Germany used to rely on cheap Russian commodities and to export to China under a US umbrella. And it's true that today the German paradigm is challenged and questioned. And we don't see yet the end of this process. And it's true that now Germany is in the middle of
a downturn. So it's already quite well priced when it comes to the markets. We don't think that we have to be gloomy on German assets, but it's true that today we don't see any specific trigger as Germany is still in a very difficult situation and is still also leading fiscal austerity.
OK, so you're not gloomy on German assets. Let's cut the story a different way. Are you gloomy on the auto sector, Benjamin?
Well, the auto sector has already repriced quite significantly. So would we sell our auto exposure today after the collapse? The answer is no. It's true that the outlook of the sector is not fantastic, but the market has repriced. So we don't have any overweight or underweight today in the auto sector. We don't see a bargain, an opportunity to step in right now. There is a lack of visibility for sure. But again, it's in the price, so we are in a wait-and-see approach in order to see when we have more information on this sector.
I wonder how much the politics in Germany and France are affecting the European investment case, Benjamin.
Sorry, I didn't hear your question. Could you repeat, please?
Just how much, we're looking ahead, of course, to the regional elections, more of them in Germany. How much is the politics affecting the European investment case right now?
Well, it's true that German politics right now is challenging. We know that the current coalition is not having some traction in the polls, is going to fall. Anyway, in Germany, there is not a big risk, as it seems that CDU should win the next election and form a coalition in a position of strength. So there is not a huge political risk in Germany, despite the rise of the populists from the far right or the far left. And in France, we know that right now we're still waiting for a government. Maybe it's going to be today. The question is not what government we will have in France, but when it falls, when it collapses. And it could take some months. So in France, the political risk would increase, but in some months, not yet. So we don't see the European political landscape as a problem right now when it comes to the market.
I'm trying to work out, Benjamin, what is driving the European market at the moment. The mood music around Europe feels very grim. The politics is difficult. The economic outlook is not clear. The ECB is not minded, it seems, to cut rates aggressively in the way that we're seeing coming through from the Fed. Yet I've got the DAX near 19,000. It's at a near record high. You talk about kind of what is happening with German assets, but let's talk more broadly about European assets. Why are European assets defying the kind of the economic story that seems to be surrounding Europe? What is driving the European asset story? Is it the soft landing potential in the United States? Is it what is happening over there rather than what is happening over here?
So there are two reasons. So it's true that France and Germany are facing difficult times right now, but it's also true that Spain, Italy, and all the southern Europe is doing far better. So the problems in Europe are not well spread. It's true that the two main pillars are suffering right now, but it's not the case for all Europe. That's the first point. So on a global overview, Europe is not doing great, but it's still okay right now despite the German problem. And it's true also that there was a lot of strength in the European export to the US. And this strength has supported European growth. The boom of European export towards the US has been massive in the recent years. The US is in a soft landing environment, but there is no recession. We don't think a recession is coming. So there is still some place in Europe to avoid a recession. It's not a great outlook. But we clearly think that Europe is going to avoid a recession for the two main reasons we mentioned.
But why am I buying German assets? Why am I buying French assets? Why is the DAX at a record high, near record high? Why are we seeing investors buying these assets at this point in time? Do you think the current price reflects the economic backdrop that Germany is experiencing at the moment?
Well, when it comes to German or French companies, they are very international. So when you buy the DAX, you buy quite a small exposure on the German domestic economy. And it's even a smaller part of the French economy when you buy French corporate. So you are talking about global companies. You are talking about companies having a worldwide cutting edge inside their sector. And so that's why there is such a disconnection between the state of the economy in these countries and their own market. The correlation between their domestic economy and their performance is quite low.
So when do you expect we'll see a rebound of the CAC 40 and a tightening of the spread between oats and buns?
Well, the rebound of... It's true that now there is a French premium. It's true that we have seen a rise of the spread of the OAT bond. And this spread is not going to widen anytime soon. We think that this spread is here to stay, and it reflects the fact that the public finance in France are in a very bad shape indeed. As long as there is going to be this French premium, we think that we will find some reluctance from investors to come back on the French markets. But when you look at the details of the French market, it's also about luxury. And we know that the luxury sector is having a strong impact on the CAC performance. So this sector is now in a kind of soft landing environment. It's more challenging. You have talked previously about the Chinese problem and the difficulty to export in China right now. It has an impact also in the luxury sector.
Yes.
So maybe the CAC 40 will face some difficulty to find new stories to regain strength, but it's not a bearish environment either for the CAC 40. It's neither bullish, neither bearish.
Benjamin, just briefly, are you watching the cabinet appointments that we're expecting to hear more about over the weekend in France? Do they matter to markets, or is it really a focus on whether this government will survive?
Well, actually, it seems that the composition of the government will not have a great importance. We have already an idea about the parties which will be involved in this government. There has been a lot of information provided on that side. And as long as there is no extreme people coming from populist party inside this government, it's not really an issue to know who exactly will be minister of what. So again, we clearly think that the main question for this government is how long it is going to survive. It's still very unclear. There are a lot of threats. It could collapse quickly, but it could last for some time. So it's the real French political question will be there when the government falls.
Benjamin Melman, we'll see how long it takes. As you said, could be a while, could be next week. Benjamin Melman, the global CIO at Edmond Rothschild Asset Management. Thank you very much indeed. Let's take a look at the core six and see what is happening in Europe in terms of the big cap stock stories this morning. As you can see, a significant amount of red on the screen. LVMH, we were just talking about what's happening in the luxury sector. It is off and off significantly. Ferrari is down by 1.33%. Is that a reflection maybe of what we're seeing with Mercedes this morning? Maybe the downgrade on ASML is certainly taking that stock down. Novo Nordisk, a spot of green on the left-hand side of your screen. Let's get the other individual stock stories that we are watching with detail this morning. In detail this morning, here's Joe.
So as expected, Guy, the auto sector is the worst performing industry in Europe today. We're seeing Mercedes coming down 8% after that profit warning yesterday, all linked to the slowdown in China, and it is hitting the other German names as well. BMW coming down 4%, extending the slump from last week, as is Continental, which was also hit, seeing losses in Stellantis as well. Guys already mentioned Ferrari, so the whole sector getting hit. Another warning, as was predicted by analysts for that sector. One stock that we didn't have on our radar was JDE Peet's. Now, a couple of things going on here. There is a story in the Financial Times around regulation of deforestation. So JDE Peet's, Kenco Coffee, they rely on countries being able to export to the EU, and there's worries around potential regulation. Also a bit of a share placing in that one, so keep an eye on JDE over in Amsterdam. Then logistics, probably not as bad as we had feared, but we are seeing declines in Deutsche Post. Of course, this coming from the FedEx read across. FedEx down 11% in the US, a big mover. So we are seeing some weakness. IDS, Royal Mail, InPost, bpost over in Belgium, all slipping as well, but not as bad as the auto space. That is really the weak one at the moment. Then we've got some deals news. Esca, this is over in France, up 12%. They've got a takeover bid coming from private equity. It is an e-commerce platform and also enterprise software. Publicis buying a company over in Michigan, around $600 million. It is in marketing in the US, expanding over there. And Grifols, meanwhile, activists building more share stakes in that company, potentially meaning more pressure on the original bidder for the firm to increase their bid. That's what analysts are saying this morning. So that one's rising over in Madrid. Publicis pretty much unchanged at the moment. There's also other share sales, just to bring you a couple catching my eye in the morning. Lottomatica, the lottery business over in Italy, an investor offloading shares following the IPO that was quite recent on that one. And take a look at poor old Doc Martens. We all love our Doc Martens, but that one getting a bit of a kicking today. If we can throw in a pun, we need a pun. Doc Martens down 14% after replacing by a big investor. And Bridgepoint, that's the one doing the deal for Esca, so raising a bit of cash, coming down 8% at the moment. Some interesting ratings moves finally. We mentioned ASML, but Morgan Stanley is also downgrading VAT. This is a peer of ASML. They're underweight this one, the same reasons. It's all about China, so it's down 3% following that move there. And then finally, Burberry, you've been touching upon the luxury names as well. So Burberry were downgraded at Jefferies, underperforming that one as well. They've also cut their price targets on LVMH across the space, all to do with the sector slowdown. Burberry today is down around 4.5%, underperform over at Jefferies.
Thanks, Joe. Yeah, really interesting that there seems to be many legs to the China concern, whether that's around chips or autos. It's having an impact in various places. Joe Easton from our equities team with an update there. Guy, we've got Governor Ueda still speaking.
Yep.
The yen seems to have calmed down a little from its morning excitement.
Maybe he's moderating some of his comments earlier on the kind of the more calm approach that he's taking to inflation. He is saying the latest inflation data a little stronger than expected. So that maybe is a factor for the yen after we've seen him maybe taking the yen off the boil a little bit earlier on, keeping a firm eye on consumer spending.
Yeah, look, such a whiplash from the July commentary that, of course, spooked the market. But, you know, Mark Cudmore saying that this is a dovish, cautious note today. There's really been no ground setting for an October rate hike, possibly because of that caution around the politics in the US and Japan. But he really has been batting away the questions about politics when they have come up through this press conference. They're keeping an eye on it. If you want to keep on track of that press conference on the T-Live blog, I do recommend it. But right here, we're going to be talking about the car makers. Mercedes cutting its financial forecast for the year. We'll bring you a deep dive into the troubled German auto sector next. This is Bloomberg. Welcome back to the opening trade. We're 22 minutes into the cash session here in Europe. Autos at the bottom of the Stock 600 basket, down 3.3%, dragged down by Mercedes. They're at 7.4%, and that is weighing on the German index this morning. The DAX lower 0.7%. So we can dig into why. Of course, we had Mercedes cutting its financial forecast for the year. But for the details, we're joined now by Bloomberg's Elizabeth Berman. She's in Munich. And Elizabeth, just tell us, what is the trouble here for Mercedes, and how much trouble is the China story going to affect all of the German auto powerhouse?
Yeah, for the German auto powerhouses, VW, Mercedes and BMW, alongside quite a few of the suppliers, of course, such as Continental, this is really bad news. I mean, we've watched for many months now the crisis in China unfolding, and as that carries on, it is now reaching consumers in greater numbers than those car makers expected. Just last week, we had BMW also cut its guidance. There was a bit of a recall issue there as well, but the bulk of that guidance cut was also made up due to worries about where the China business was headed. In Mercedes' case, it's even a bit more worrying because they rely on sales of their S-Class and Maybachs in China a lot for the margins that they have in mind. That's not working out for the time being, and that sort of undermines to a degree the CEO's strategy of moving more sales into that very top end where you've got the G-Wagon, the S-Class and the Maybach. We've had for some years now supply chain issues, and those have gone away. And with that, and now with China on top of it, we're seeing returns really wither away.
Yes, so today's news is very much about sales in China then, Elizabeth. But Chinese automakers also trying to sell cars into Europe, and that's causing tension closer to home. What is the latest on the tariff talks that are taking place between China and the EU? We know that they are ongoing, and the fact that they are ongoing and not settled seems to have added some optimism to things from the Chinese perspective.
Yeah, there's been a flurry of meetings led by the Chinese Commerce Minister. He was meeting with car makers and suppliers in Brussels this week. Then he met also with the EU's Trade Commissioner. He also visited a range of countries to garner support for changes to the planned tariffs. The EU is supposed to vote on them next week. This was scheduled for September 25. We understand there might be some slippage. And the latest indications were that both sides remain very ready to talk. But that is nice and sort of positive, but we haven't really seen any concrete ideas around what such constructive measures could be. Both sides are, of course, pretty interdependent. Like we were just saying, the German car makers sell a load of cars there. And at the same time, the Chinese want to push into Europe. So if the tariffs do get in, we are set to see some retaliatory measures from China for sure. They've already outlined that across a few sectors.
I do wonder how long it'll be before Europe needs to start talking about supporting its car sector, maybe with some financial help. Maybe tariffs won't be enough. Elizabeth Berman in Munich on what is happening with the German auto story this morning. Thank you very much indeed. European markets certainly feeling the pressure coming out of that sector this morning, having a big impact, as you can see on the numbers on the screen in front of you. We are seeing the DAX underperforming. We're going to talk about German elections, regional elections next. Brandenburg going to the polls this weekend. Is this basically the last gasp for Olaf Scholz? If he doesn't do well, if the AfD do well this weekend, what is his future looking like? We'll ask that question next to Judy Dempsey. This is Bloomberg.
Welcome back, everybody. This is the opening trade, 30 minutes into our trading session, and it is a negative one, certainly over in Germany. The DAX down by 0.8% this morning. That has a lot to do with the auto sector. We'll continue to monitor that for you. Let's talk about other things on the move, though, in Germany. There you can see the weakness of the German market. Bloomberg has learned that the German government has started an internal probe into its own handling of the Commerzbank share sale. This after the transaction allowed UniCredit to take a major stake in the lender. Let's get more from Bloomberg's Jenny Serrain, who's following the story, of course, for us. So what exactly are they trying to achieve from this probe? Because we saw UniCredit go and buy around 4.5%, I think it was, in the market, and then they got another similar amount from the German government, given the 9% or so in Commerzbank. So what is being investigated here?
So it's The government is really looking into kind of how this was allowed to happen. We've reported a lot that the government felt it was wrong-footed in this. And so they're really just trying to understand kind of the mechanics of how the sale went down. And I think also really try to figure out a path forward for what could come next for Commerce Bank.
Because even as UniCredit CEOs told Bloomberg, told our colleague Francine that they thought they'd notified the German government.
Yeah, so I think that's
or at least they weren't in the dark.
That's what I think they're trying to get to the bottom of, essentially, is kind of the exact, tick-tock of how this all took place and really understand kind of who made, what moves and at what timing.
Yeah, so what other banks and Wall Street players could get dragged into this investigation?
I think it'll be interesting because, it's obviously you've got the two, principal players in terms of UniCredit and Ortel, and then you also have Commerce Bank, you have the government, but there's a lot of different, banks and Wall Street folks that actually pull off these sales. And so the actual mechanics of it, involves a lot of different players. And so I think they'll be looking at, every single piece of this puzzle to really try to put together exactly what happened.
We spent our morning talking about the auto sector and the troubles that exist within it, and that takes us to the wider German economy and what is happening there and the trouble that Germany is experiencing, Germany AG is kind of experiencing. Does the trouble that the German economy is experiencing kind of writ large make it more or less likely that Ortel succeeds in taking over Commerzbank? Kind of, are they feeling defensive? Or does the German government need the money? I'm just kind of wondering how the bigger picture impacts the bottom-up story surrounding Commerzbank.
Yeah, I mean, I'm sure that's actually a huge reason why this investigation has even been started. This is a national champion for Germany in terms of Commerzbank, one of the biggest banks in Germany. And so it's a really important player, and I'm sure the government has a lot of questions about what it would look like for that to fall into foreign hands. But at the same time, UniCredit is considered one of the better-run banks in Europe, and it has some of the best returns. And so I think there's a lot of, probably pushes and pulls in terms of whether or not the government would really want this to happen.
Jenny, great stuff. Thank you very much indeed. Jenny Serene updating us on what is happening with Commerzbank. Who knew what when? We'll find out. The Germans are going to the polls again this weekend. The state elections continue. This time it is the turn of Brandenburg, voting Sunday in regional elections. Now, Brandenburg has been governed by the Social Democrats since 1990, but the far-right AfD is making gains. Certainly that's what the polling suggests going into this. Let's talk about the impact of those gains and what it could mean going forward, particularly for Olaf Scholz. Judy Dempsey, Senior Fellow at the Carnegie Endowment for International Peace, joins us now. Judy, great to speak with you. If the AfD do well this weekend, is Olaf Scholz's party going to look at somebody else to take it into the next general election? How quickly could he be out on his ear?
Well, good morning, guys. So much depends, actually, on the kind of narrowness, or indeed this, if the SPD can actually win in Brandenburg against the AfD. It is so close to call at the moment, but the opinion polls so far have been correct. The problem is that Chancellor Olaf Scholz is actually very weak at the moment in terms of the opinion polls, trailing so many points behind the opposition Christian Democrats. He himself has said he's prepared to run again as Chancellor. Federal elections are due next year, but we'll have to see what happens on Sunday. And so much depends now on the Premier of Brandenburg, Dieter Woidke, who's done quite a good job. He's quite popular in Brandenburg, but nevertheless, because of the unpopularity of the coalition here in Berlin, the AfD, for many reasons, is surging ahead. As I say, it's neck and neck at the moment.
Is this a Scholz popularity contest? Is that what happens this weekend, or are there other issues at play here?
It's certainly a kind of Scholz popularity context. Indeed, some of the SPD people to whom I spoke in Brandenburg didn't want Scholz to come up and campaign because he is so unpopular. This is the first thing. Secondly, really the migration issue, the refugee issue, the asylum issue plays huge into the AfD and indeed to the people of Brandenburg generally. And so this is a big issue. And then there's the EU issue, there's the American issue, there's the anti-Ukraine issue. And these are all issues that the AfD have been actually playing very hard on. And so they've got the SPD on the hop. And so Scholz, and particularly the Premier of Brandenburg, has to fight very, very hard to cling on to power, which they have held, as you mentioned, since 1990, German reunification.
Judy, good morning. What can you tell us about the role of the BSW party here, the far-left party? And I'm wondering here in particular about the extent to which they are, or maybe I should just say she, because it's a very new party formed around one person, essentially, whether they are going after the same audience to some degree as the AFD, because, OK, one is far left and one is far right, but there does seem to be some overlap, certainly in policy around immigration and around Ukraine.
Indeed, it's a great question. Sarah Wagenknecht, she's quite a skilled politician, and she was in the old Left Party before she left it. That old party was dissolved, and she has really organised an incredible campaign over the past several months, doing very well in the last two recent elections in Saxony and Thuringia. Now, she actually is far left, anti the war in Ukraine, a bit of anti-Americanism, but somehow, even though she is far left, she may actually attract some votes actually from the Social Democrats and indeed maybe from the AfD. At the moment, she's running very high in the polls, about 14%, which is quite phenomenal. So she could be a kind of kingmaker, depending on the outcome of the Sunday elections. In other words, she could split the vote and rob votes from the AfD and from the SPD. It's going to be very interesting, this kind of vote on Sunday.
Yes, Judy, to go back to Guy's original question, is there any kind of result here that might trigger some real movement in Scholz's position in terms of his role in the party, his role in the coalition? You know, are we talking about something that significant from this one state election, although it comes on the back of two other state elections, which were obviously very disappointing for his party?
Logically, it should be a moment for Scholz to decide his future and the future of the coalition. But logic doesn't really determine the outcome of this coalition in Berlin. The problem with the coalition is that if they went to the polls now, they would be decimated, and also it's very difficult to actually call a very early general election. This is the first thing. And secondly, Scholz is quite a stubborn politician, and he doesn't want to actually cede authority at the moment. He's willing to hang on for as long as possible, but he's going to need some major positive results to actually make a difference, to show leadership. He's got saddled with so many problems, just not the fragmentation of German politics, the economic problems, the Volkswagen issue, the Commerzbank issue, the whole structure of the German economy. And somehow he's not delivering on any of these things. If he did, I think it might make a little difference for his standing in the polls.
Yeah, they're the challenges. What about the solutions? How can the centrists stabilise German politics? How do they win the core voters back? Is it tougher migration policy, for example? Is that the answer?
Well, their answer to the migration policy is close the borders. I was travelling in Poland last week, and we were warned by the German railways system to actually have our passports ready because they're introducing controls. Remember, Germany borders with at least 7 countries, and that's a lot of personnel to actually close the borders. But if you actually do these checks out of security reasons, what happens then to the whole kind of EU freedom of movement? What happens to the fabric of the Schengen Accord, which allows free movement across the borders? So Germany is pivotal here on the future of the EU, in some ways, for Schengen, but also in terms of how it sells itself inside the EU. So there's an awful lot of stake here, but migration is the key issue, but closing the borders is not actually the solution that's going to stem these flows.
Judy, the German auto sector is in crisis. How does that change German politics? How does it change the German economy? How does it change Germany's approach moving forward from here? This is at the heart of the German economy, and bad things are happening. Mercedes is down hard today. BMW's having a tough time. Volkswagen's having a tough time. How does Germany deal with this, and how seriously is it being perceived in Berlin? How seriously is Berlin taking this story?
It's big news here. Very, very big news. The crisis in the car industry really is the crisis of industrialization in Germany. And Germany has been very, very slow to deindustrialize, very, very slow to digitalize, very, very slow to recognize the big threats, the big challenges of actually installing as quickly as possible electric cars. It's been incredibly slow. And I think one of the main reasons is the whole connection between politics and the industry here. It's very, very close. And when a company, like a big car industry, is in trouble, well, the answer, subsidies are put off the fatal day when they'll have to really size down and move forward. It's such a major issue now because this is the backbone of the German economy, but it's a backbone that actually is getting broken day by day.
Yeah, on that competitiveness theme, Judy, you touched on the relationship between Germany and the rest of Europe. I wonder if Germany's fundamentally misunderstanding the point of Draghi's report and how it relates to the European Commission. If you think that the domestic politics in Germany are going to continue to weigh on Ursula von der Leyen's ambitions to drive competitiveness in the EU.
This issue of competitiveness is so important because competitiveness actually relies on innovation. And of course, von der Leyen has mentioned innovation quite a lot in the past couple of days. As for the Draghi report, I mean, it's clear that Draghi is calling for much more fiscal union, much tighter economic union, monetary union, much tighter integration. And actually, Chancellor Scholz isn't buying into this, nor indeed is the opposition leader, Friedrich Merz, who hopes to be the next Chancellor of Germany. He's not buying into this either. So you wonder what Germany is buying into in terms of making the European Union more competitive. Holding on to old industry is certainly not the answer, and actually bailing out industry with more subsidies and taxpayers' money isn't the answer either. It really is embracing new technology, which would actually give the German economy a spur. But I cannot see this happening at the moment, and nor can I see Germany embracing von der Leyen's moves for more innovation or indeed Draghi's report for more fiscal monetary union.
Judy, thank you very much. Judy Dempsey, Senior Fellow at Carnegie Endowment for International Peace. Thank you for joining us. Talking there about the German economy, the role of Germany within Europe as well, crucial. And this takes us back to a conversation we were having yesterday with Jens Larsen from Eurasia Group. We talked about the fiscal picture across Europe, and we were trying to get a sense of if there's objections to immigration by various electorates or parts of electorates within Europe, and if birth rates are low and you still want growth, you're going to need productivity. Can you invest to get that productivity? This is what he told us.
It has fiscal space. I think the fiscal issues we are seeing in Germany is almost entirely a function of their own self-imposed rules. There is room in Europe to raise investment. I think it's absolutely critical. The same is true in the UK. I don't think the market would bat an eyelid if the government turns up and says we want to raise borrowing in order to raise investment, because that does generate growth, and ultimately that's what you need.
Jens Larsen, speaking to us earlier this week, and he was talking there about the overall European picture, the German picture. He says they've got room to borrow. He was talking about the UK, saying they have room to borrow. It's interesting whether we see that it's remotely on the agenda, given our quite recent Liz Truss-induced market meltdown moment, which we remember all too well, and perhaps they remember all too well at number 11 as well. Interestingly, I spoke to a business leader yesterday who was talking about actually they think it's more about just policy certainty that will help the UK economy. But you're going to be heading to the Labour Party conference, Liz.
I am indeed. I'm off to Liverpool, and what business I think really wants is detail, because Labour managed to get through the election without giving away much detail because of that poll lead and the momentum just gathering behind them. Now this is an opportunity to give some, so that business can invest, so that they can achieve that top goal that
Doesn't that need to come with a positive message, though?
Yeah.
And that's the concern at the moment, that there is no detail and the message is quite downbeat.
And arguably too downbeat when you look at the economic data. You've got inflation again at 2.2%. The BOE doesn't feel the need to go for a half-point cut when you look at the growth story. But, yeah, you've got those consumer confidence figures from GfK this morning. Perhaps, if we look at their explanation for it, it's because of the gloom from Keir Starmer.
Something's putting people off buying sofas, it would appear. Couches for the American audience. Really interesting. And the timing of the various set-piece events in the UK schedule in the next month or and a half is really interesting, because we end with the budget. But before that, we've got an international investment summit. So you're going to talk to the international community, try and encourage investors to come to the UK to spend money, to invest, but they won't have certainty around various tax rates, I assume, unless we get some of that information a little ahead of time.
But what you do have is a message of, it's really bad. Yeah, got a big hole. We're going to have to raise taxes. It's going to be really painful. Is that the message you want to convey to an international audience, which is thinking about investing in the UK?
Yeah, and you talk about the agenda over the next kind of couple of months. Look at the agenda for Labour Party conference. Keir Starmer's jetting off to UNGA. He's going to New York. Surely that speaks to the fact that the domestic picture has been perhaps of his own making, more difficult than the international agenda that he is going to go and deal with instead? It's going to suck
easier
the
to
life
manage,
out of
maybe.
this.
Easier to manage. I don't know. It feels, to your point, maybe that investment summit should have come after the budget.
Yes,
that would be logical.
And maybe the message will have to change ahead of that investor summit because, yeah, you don't want that domestically. The message that was supposed to resonate domestically and blame the Tories for the things that the Labour Party inherited. That was the intention of that message. You know, maybe that's done. And now, in terms of messaging, maybe they need to move on to something else
and
that
what a change
attracts
of tone.
international investors.
You know, when you sat down with Johnny Reynolds, the business secretary here for our business debate, it was after, you know, they'd been wooing the city, the smoked salmon and scrambled eggs offensive. It was all such a different mood. And the last Labour Party conference, such a different mood to the doom and gloom now.
Starting to show up in the data. Is it going to start showing? The consumer's feeling it. Are we going to see it showing up in the investment story? I think that's I think that's what we need to wait and see to see whether or not that shows up. Smoked salmon and scrambled eggs. Never been a fan of that combination anyway. Smoked salmon gets warm. Let's talk about Hugo Boss. I need to bring you at the end of this show, I feel, some positive news out of Germany. And I find it here in Hugo Boss. The stock is up by 2.64. We've been trying to figure out exactly what is happening here. It feels like insiders are buying. Seems to be the reason maybe for that story. So I feel we should end on a positive note rather than going with the Labour Party strategy of sounding rather downbeat. So it's the end of the week. I feel we should finish on a positive note. That wraps things up for this programme. Not quite yet. We're not quite there yet. We've still got a few other things that we need to be talking about. I'm going to get ahead of myself. Talking about finishing on a positive note. We'll be back in a moment. We need to still digest what is happening out in Japan as well. We'll talk more about that in a moment too. This is Bloomberg.
.50 a.m. here in London, but let's go to the Middle East now, where it's reported that Israel has launched fresh airstrikes on targets in southern Lebanon. Meanwhile, the Secretary-General of Hezbollah has said that the mass explosions of telecom devices in Lebanon was a, quote, huge security and humanitarian blow.
This will be confronted with a severe reckoning and a just retribution, in expected and unexpected ways. But because this new battle involved hidden hands, let me change my approach. I will not talk about a time, a form, a place, or a date. Leave the subject, and the news will be what you see, not what you hear.
So let's bring in Jumana Basechi, our Horizons Middle East and Africa anchor. Jumana, I ask you every day, but we ask again, how likely does an all-out war between Israel and Hezbollah look now?
Well, things have escalated even further in the last 24 hours. Yesterday was the first opportunity the world had to listen to what Hassan Nasrallah had to say after those waves of explosions rocked Lebanon Tuesday and Wednesday of this week. The Lebanese Health Ministry putting the number of deaths now at 37, with more than 2,800 people injured. And Nasrallah blamed Israel for the attacks this week, saying they had crossed all red lines, but also conceded that it was a huge security and humanitarian blow. But then he also said these attacks were not going to deter Israel from firing on Israel, and the only way, Hezbollah from firing on Israel, and the only way they would halt attacks is to stop the aggression on the people of Gaza and the West Bank. So the language was pretty defiant still from Nasrallah. But as ever, in these speeches, he didn't give a lot of detail as to what that retaliation would look like. Now, on the other side, earlier this week, we had heard from the Israeli Defense Minister Yoav Gallant, who said that they are now entering into new phase of the war. They're redeploying more military to the north of the border. And we saw an intensification of airstrikes onto South Lebanon over the course of the evening, with more than 100 rocket launcher targets being struck over the last 12 hours. And that does tell you that this indeed has marked yet another point of escalation in what has been quite an eventful week in that part of the world.
Jumana, how should we think about life developing in Lebanon for the population there? I'm now seeing airlines saying you can't bring mobile phones onto our planes, you can't bring walkie-talkies onto our planes. How different is life in Lebanon as a result of what has happened this week? How tense is the country?
it's hugely different, Guy. Everybody in the country is extremely scared. There's this feeling of paranoia. People don't trust their smartphones. Anecdotally, you hear of young children, 12, 13-year-old children, messaging people saying, don't use your don't use your mobile phones, take your smartphone watches off, because there's an absence of trust in the telecommunication devices that operate within the country. And so, yes, there's this high sense of fear that what is going to happen from here onwards could lead to further escalation, and that potentially Israel could be preparing for a larger offensive into the country. And I've got to say here that it seems as though the diplomatic angles have not been working. This is backed up by our own reporting at Bloomberg, with many Israeli officials saying that the diplomacy angle hasn't worked, and therefore they have no option but to start redeploying more forces to the northern part of the country to ensure that security is restored. But how that is going to happen, of course, is the million-dollar question here. What we do know is the international community, the likes of U.S. Secretary of State Antony Blinken, even President Macron weighing into the debate yesterday, saying all sides need to step away from the brink. Macron saying war is not inevitable. Nothing, no regional adventure, no private interest, no loyalty to any cause merits triggering a conflict in Lebanon. So at this point, despite the talk from the international community, it doesn't appear to be the case that either Hezbollah or Israeli military want to step down.
Jemana, thank you very much indeed for the update. We greatly appreciate it. Jemana Besechi joining us out of Dubai. We're wrapping up this week. Busy week ahead, though.
Yes, absolutely. If we pivot our attention to what comes next on the sort of global stage politically, we've already talked about the elections that are taking place on Sunday in one state in Germany, in Brandenburg. It's an important state, has symbolism certainly for the SPD and for Schulz himself. And we were talking to Judy Dempsey earlier, who was saying this could be something of a personal verdict. He's trying to fight off the AFD. The AFD could be dented by this new left-wing party, the BSW. So there's a lot of moving parts in the German story, and we'll see how it all plays out for the ruling coalition.
Yeah,
Lizzie's going up north.
I am back where I belong. Yeah. To Liverpool for Labour Party conference. I'll hope to get a bit of detail out of Johnny Reynolds, the business secretary. I'll be speaking to him on Tuesday for a fireside chat, but really taking the temperature in the room of business, whether things have changed for them now that Labour's actually in power.
We've got some inflation data coming up out of the States. We're going to be watching that very carefully. I suspect we're going to see a flood of Fed speak next week as well.
Although we've moved, haven't we, from this sort of inflation obsession to now the labour market obsession.
Do we care? Yeah, maybe. Or is there now this danger that the cuts sort of start to refocus our attention on that inflation data? Maybe. Reignite the US economy. We should probably leave, not with Hugo Boss. We can finish the show now, it's okay now. We've got that. But with what is happening with the autos. The autos are having a really tough day in Germany. And we continue to see this story developing. Today it's Mercedes. That's what we're watching so carefully at the moment. But that is the real story out of Europe this morning. Quite a significant amount of weakness in that space, as you can see. Mercedes leading the charge lower. The Pulse is next. Have a great weekend. This is Bloomberg.